Welcome to the VRT token analysis. In this video, we will analyze key metrics of a project and its prospects. Token analysis. Token type. VRT is a tokenized stock derivative designed to track the value of shares of Vertiv Holdings, a major provider of data center power, cooling, and infrastructure solutions. CoinMarketCap classifies it under tokenized assets, tokenized stock, and DeFi categories. Project objective. The objective is straightforward: provide blockchain-based exposure to Vertiv shares, enable 24/7 trading through crypto infrastructure, expand access to traditional equities via tokenization. Vertiv itself is a leading supplier of critical infrastructure for data centers, including power management and cooling systems. The company has benefited from growing AI and cloud computing demand. Utility. Utility derives from stock price exposure, blockchain settlement, portfolio diversification, participation in RWA ecosystems. Tokenomics. Unlike traditional crypto projects, VRT does not rely on inflationary emissions or staking rewards. Positive's valuation linked to underlying company avoids token dilution concerns, backed by an identifiable real-world asset concept. Liquidity. Liquidity appears weak. Current CoinMarketCap data shows no reported market capitalization, no reported 24-hour trading volume, limited publicly available market depth information for the derivative token itself. Smart contract and security. Positives, blockchain-based settlement, transparent transfer records, exposure to regulated public company valuation. Team and governance. The underlying company, Vertiv, is an established multinational infrastructure provider with decades of operating history dating back to the 1940s. Positive's mature business, established corporate governance, large institutional ownership in traditional markets. This is far stronger than anonymous crypto teams. Community and social presence. Community interest comes primarily from stock investors, AI infrastructure investors, RWA enthusiasts, tokenized asset traders. Honeypot risk. No obvious honeypot indicators appear present. Positive signs linked to a publicly traded company, transparent pricing reference, publicly listed tokenized asset. However, investors should always understand the issuer structure behind any tokenized stock product. Historical discussions around tokenized stocks have highlighted that some products may represent cash-settled derivatives rather than direct ownership of underlying shares. Competitive positioning. VRT benefits from two major growth narratives. Theme 1, AI infrastructure. Vertiv supplies critical infrastructure used in data centers supporting AI and cloud computing. Theme 2, tokenized finance. The tokenized equity sector continues expanding as blockchain markets seek exposure to traditional assets. Adoption and growth potential. Growth drivers include AI data center expansion, cloud computing growth, tokenized equity adoption, institutional blockchain integration. Risk versus reward. Potential reward exposure to AI infrastructure growth, participation in tokenized finance expansion, real company valuation support, stronger fundamentals than most crypto assets. Key risks: weak liquidity, issuer custody risk, regulatory uncertainty, tokenized stock market immaturity. Despite those risks, the overall profile remains strong. Final score: high-quality tokenized AI infrastructure asset. Investment decision. To decide whether to invest in VRT token, do your own research or get insights from tokenlisting.org.